Well, happy Monday once again, everyone. Bryan Devore with the Devore Realty Group, and you may see a Slurpee on your screen. That's because today is 7-Eleven, Slurpee Day. I think they're still doing free Slurpees at 7-Eleven today. So make sure to go get yours. Have a nice treat for yourself. Let's jump into the Monday market moment because we have a lot to cover. The market is changing quickly, so I want to go over all the latest stats and another milestone going in a backwards direction. The HomeDex report is out, so we'll take a look back at the market a little bit. Then versus now, the last time we had sort of the peak of the market and where we're at now at the peak of the market and what the differences are, why we're not in a bubble situation. And finally, fabulous vacation homes to buy. All right, but first, the totals. Right now, we have 4,869 homes for sale throughout San Diego County. That's up 252 from last week. Inventory continues to rise. The median list price of the homes that are on the market, $899,900. That's an increase of $900 from last week. Pending sales, 2,523. That's down 52 from last week. Oh, sorry about that. And the median list price of the homes that are currently in escrow, $799,999. That's down $1. So the median list price for homes on the market are almost $900,000, but the median price of the homes that are in escrow, about $800,000. Months of inventory, here is the threshold. Here's the benchmark that we just went over in a backwards direction. Months of inventory is 2.08. That's up 0.2. And that is now over 2 months of inventory for the first time in a very long time. We had been well under 1 for quite a long time. It's been since probably a couple of years ago since we were above 2. Since last week, new actives that came on the market, 1,088. So that's 64 more homes came on the market last week than the week before. The median list price of the homes that came on the market last week, $867,999. It's an increase of about $5,500 from the week before. New pendings for 24. So 56 fewer homes went into escrow last week than the week before. Median list price of those, $799,000. That's down $50,000. So we're seeing maybe a trend that the homes that are going in escrow are priced below, and in some cases well below, the prices of the homes that are on the market. What's selling? Stuff that's lower priced. Average days on market of those homes that are in escrow, 19. That's up 4 days since last week. So homes are taking longer to sell. New pendings listed within the last week, 21. So 5% of homes that went into escrow last week were only on the market for a week. New pendings listed within the last 2 weeks, 151. So 36% of homes that went into escrow last week were on the market for 2 weeks or less. Those two numbers, the 5% and the 36%, had been much higher. 9 and 10% of homes were selling within a week, and about half of the homes were selling within 2 weeks. That number's dropped quite a bit. Since last week, we saw 381 homes close escrow. That's down 119. It's not a big shocker. Last week was 4th of July, so we had 1 fewer day to close escrows. Median list price of those homes, $829,000. That's down $20,000 from last week. Median sales price, $845,000. That's down $10,000 from last week. The average days on market, 15. That's up 1 day. The least expensive sale was in San Diego. It was $150,000. The most expensive sale was in La Jolla. I think 3 or 4 weeks in a row it's been in La Jolla, $5,700,000. Here's a chart that shows the new actives, the new pendings, and the new solds. And we can see inventory did dip. Now it's coming back up again. Number of homes going into escrow down. Number of closed sales again because of 4th of July also down. And there's the median list and sales price chart showing where those are sort of bouncing around. Here's the Market Watch report from the HomeDex, the North San Diego County Association of Realtors. This is a San Diego County overview, breaks it up into 4 quadrants: East County, Metro, North County, and South County. As you can see, for the month of June, the median sales price was up across the board versus last year. Percentage of original price received, though, down across the board. And so we're seeing the sales prices are dropping relative to list price. Days on market was sort of mixed, some high, some lower. Closed sales, though, across the board were down 19% in East County, and then 35, 39, and 41% fewer sales than last year. And of course, if you like this report, I'm happy to send you the report. It's also in the constant contact email. New listings last month. In the month of June, you can see 2020 versus 2021 and 2022. We actually have fewer new listings coming on the market now than we did a year ago for single family detached and attached. Year to date, we're also below. So inventory is still low, even though it's going up. It's still relatively low. Pending sales, that's a huge drop. We can see where it was for single family detached homes 2 years ago and last year, and it drops quite a bit to 703, 309 for attached properties. Year to date, pending sales way down as well. Closed sales also way down versus last year by hundreds versus last year and year to date. And here's the big issue: housing affordability index. Housing affordability has always been a problem here in San Diego County, and it took a huge dump, so to speak, with the rise of interest rates. In the month of June, you can see single family detached. Affordability was 54% in 2020 when interest rates were around between 2 and 3%. Last year, prices were going up quite a bit, but interest rates were still low. So it was at 40. Now it's at 27. Prices are still roughly the same, but interest rates going up. Affordability is really a big problem. Even for single family attached homes, we're at 42. Year to date, numbers across the board down. Something's got to give as far as affordability for people to be able to buy homes. So here's the difference between the Great Recession housing market and today's housing market. I wanted to show you this chart. It shows a very good comparison. Glut of homes on the market before versus very limited inventory. Low demand in both cases, but way too much supply versus demand. Heavily favoring buyers versus now low supply and also low demand creates balance. Low or no down payments were common before. Now we have larger down payments. Subprime loans were a problem, teaser rate loans, etc. Now tight qualifications and strict lending standards are the norm. The average buyer FICO score was 681 back in 2006. Now it's 745. So people have to qualify and they're putting money down. Flood of cash out refinances. Now with higher rates, we don't see that anymore. So people aren't using their homes like ATMs like they were. The delinquency rate in the nation was at 4.7%. Now we're at 2.8%. We have $5 trillion of tappable equity, which I thought is an interesting stat, versus now we have $11 trillion of tappable equity. So if people lose their jobs, they're not going to have to foreclose on their homes. They have enough equity to weather the storm. And 31% of all homeowners had no mortgage back then. 37% of all homeowners have no mortgage now. So basically the bottom line is we're not seeing the bubble like we did before. We're not in such a bad shape. People are going to be okay, generally speaking, which is good news for everybody. And finally, escapist luxe vacation homes that will rock your world. There were 5 in this article. I picked this one out of all of them because you can probably tell why. It's a great picture of an amazing home that you can buy. 20, I guess it's Kai Ala Drive, Unit 92 in Lahaina, Hawaii. Heavenly in Hawaii, one of only 6 beachfront parcels in luxurious Kaanapali, sitting on a full acre of land. The 11,076 square foot mansion features 8 ensuite bedrooms and 9.5 bathrooms. Beachfront pool with a cabana right in the middle of it. It has a media room, formal and informal dining areas, a library, game room, a gym, and an extensive outdoor kitchen. Almost all the rooms open up to the great outdoors, so the sea breezes will find you. Are you guessing right now what you think the price might be? Maybe you're right. $24,500,000. If you got the money, it's a great place to live as a vacation home. That's it for this week's Monday Market Moment. Hope you enjoyed the stats. I know I threw a lot at you. If you have any questions about the market, what it means for you, if you're looking to buy something, sell something, you're just not exactly sure what you want to do, I'm happy to provide whatever you need. That's it for this week's Monday Market Moment. Look forward to seeing you next Monday. Have a great day.